Hi everyone, I'm Ava and welcome back to your financial journey. In today's video, we're going to talk about leasing versus buying a car. Both choices have their advantages and disadvantages. So let's jump right in and explore the key differences between leasing and buying a car, with a focus on factors such as cost, ownership, flexibility, and long-term financial impact. What does it mean to lease versus buy a car? To understand the comparison fully, let's first start with what it means to lease a car. And even though experience says that about 25% of new cars in the US are leased, it's not always well understood what a lease really is and how it works. So, when you lease a car, you essentially rent it from the dealership for a longer period. That's typically 2 to 4 years, although these days, some people have car leases that run as long as 7 or even 8 years. During this time, you make monthly payments, but at the end of the lease term, you have to return the car to the dealership. After all, you were just renting it, so to speak, and the dealership still owns it. Leasing agreements often have restrictions like mileage limits and guidelines for the car's condition. Now, let's move on to buying a car. When you buy a car, you're purchasing it outright, either 100% in cash or financed with the help of a loan, which means that you'd borrow the money from a bank and use that money to pay the seller upfront and in full for the car. When you buy a car with the help of a loan from the bank, you become the legal owner of the car. However, you still have to make your monthly loan payments to the bank that you borrowed the money from, or they can take the car away. But after you've made all your monthly payments to the bank, you'll own the car outright and be able to keep it for as long as you want. Now, let's talk about the cost of leasing versus buying a car. Cost is one of the most significant factors in almost any decision-making process, and it's no different for cars. Lease payments tend to be lower than monthly loan payments when buying a car. That's because you're only paying for the vehicle's depreciation over the lease term, rather than the full purchase price. Car depreciation refers to the decline in a vehicle's value over time because of factors like age, mileage, wear and tear, and more. For individuals who prefer a lower monthly payment, leasing might seem more affordable up front. But leases often face additional costs, like a down payment and potential penalties for exceeding mileage limits or for wear and tear beyond what's considered normal. Buying a car, on the other hand, typically requires a larger down payment, and monthly payments may be higher, especially if you finance the vehicle purchase. But after the loan is paid off, you no longer have to make payments, which could result in long-term savings. Now, let's move on to the ownership and equity differences when leasing versus buying a car. One of the primary differences between leasing and buying is the question of ownership. When you lease a car, at the end of the lease term, you have no ownership of the car. The vehicle is returned to the dealership. And because you have no equity in the car, that's it. No sales proceeds for you, nothing. If you want to continue driving, you'll need to lease another vehicle, which could result in a continuous cycle of lease payments with no accumulation of asset value. When you buy a car, on the other hand, you are building equity in the vehicle because you own it. And once your loan is paid off, the car is fully yours. This means that any value in the car is yours, and you can sell it or trade it in as the down payment for your next car. Buying a car can be more financially advantageous if you plan to keep the vehicle long term, as there are no ongoing payments once the car is fully paid for. Though again, you should not forget about the costs of maintaining and repairing the car that you own. Moving on now to the flexibility and usage considerations when leasing versus buying a car. What are your lifestyle and driving habits like? Leasing is often more suited for those who prefer to drive a new car every few years. However, leases come with mileage restrictions, typically around 12,000 to 15,000 miles per year. If you exceed the agreed upon mileage, you'll face additional charges. Leasing also tends to restrict modifications, because the car has to be returned in good condition at the end of the term. Buying a car provides more flexibility. There are no mileage limits, and you can modify the vehicle as you like. You also have the option to keep the car for as long as it runs well, which can be particularly advantageous if you intend to keep the car for a long time. Buying offers more freedom in terms of how you use and maintain the vehicle as well. The other thing to consider is the long-term financial impact of leasing versus buying a car. Leasing may offer a more affordable short-term solution, but over the long run, it can become more expensive if you continue to lease vehicles one after another. At the end of each lease term, you have no asset to show for the money you spent. In essence, these were all rental fees you paid to the dealership. If you always lease, you'll be perpetually paying for the use of a car without building any equity. Contrast that with buying a car, which can be more of a long-term investment. After the car is paid off, you can drive it for many years without the burden of monthly payments. While the upfront cost may be higher, the long-term cost per year of ownership can be much lower than leasing, especially if the car is well maintained and lasts for a long period. Plus, the car's resale or trade-in value can offset some of the purchase cost, which further increases the financial advantage of owning a car. Up next, we have the depreciation and maintenance considerations of leasing versus buying a car. Both leasing and buying involve concerns about depreciation and maintenance, but the impact differs. With leasing, since you only have the car for a few years, depreciation is less of a concern for you. The car will have depreciated by the time the lease ends, but it doesn't really matter to you because you're just returning the car to the dealership. You don't care how much residual value is left in the vehicle. You do have to maintain and care for the car, but this can be done on a more basic level, just so that the dealership doesn't charge you for lack of care. When you own a car, though, depreciation and maintenance do have a greater direct impact on you and your finances. All vehicles lose value over time. But since you own the car, you can better maintain it and control when and how much you sell and or trade it in for, thereby minimizing the depreciation losses. Do keep in mind, though, that after the warranty expires, you will be responsible for maintenance and repair costs, which can become significant as the car ages. And fun fact, depreciation is one of the reasons why you should never buy a brand new car, even if your preference is to buy instead of lease. Research shows that the moment you drive a new car off the lot, it loses 10 to 20% of its value instantly. In fact, according to Investopedia, a new car depreciates 20% to 30% in its first year. That means if you buy a $30,000 car, it might only be worth around $21,000 to $24,000 a year later, even if it's still in great condition. You're basically paying a premium just to be the first owner. So even if you want to buy a car, it may be financially wiser to buy a gently used car, say 1 to 3 years old. Let someone else take that depreciation hit while you get a nearly new vehicle for thousands less. That's what my parents did during the pandemic, and they got a great price. To this day, they still say that this car was one of their best purchases ever. So let's wrap up today's leasing versus buying discussion. Ultimately, whether leasing or buying a car is the better option depends on your financial situation, lifestyle preferences, and long-term goals. Leasing is ideal for people who want a new car every few years and prefer lower monthly payments, while buying is a better option for those who want to build equity, drive without mileage restrictions, and keep a car for the long haul. Carefully considering the factors of cost, ownership, flexibility, and long-term financial impact will help you make an informed decision about which option best aligns to your financial journey. So what's it for you, leasing or buying a car? Drop a comment below and let us know. Okay, my financial friend, I hope you found this video helpful. And don't forget to check out this video here from my sister Caitlin if you want to learn more about how to improve your credit score for your next car lease or purchase. Thanks for watching, and we'll see you again next time.